folks. Hope you're having a fantastic weekend coming at you with this week's market wrap video. Hope you had a good week trading. Last week I threw up the yellow caution flag in anticipation of coming up into some resistance. I felt as though the risk was outweighing the potential reward. And in the beginning portion of the week, it looked as though maybe I had overreacted. But by selling off some of the things that I sold off and raising cash. However, by the end of the week, it turned out to be a pretty good call and feeling pretty good about the position that I'm in moving into next week. So next week is going to be a big week. We've got the Fed coming up on Wednesday. I doubt that they're going to raise the rate, but anything could happen. And if they do raise the rate or continue the hawkish tone, that could be tough on the markets. We'll see. We may see a little snapback bounce on Monday or Tuesday, or Monday and Tuesday, in anticipation of the Fed meeting. That is a possibility. And if the fear chatter escalates over the weekend, maybe we see a continuation of what we saw on Friday. But basically, we came right up into area of resistance. Thought we were going to maybe tag 5,000 in the NASDAQ, and we were unable to do so. We had a pretty good little sell-off on Friday because of Brexit. Some chatter that the majority is looking to exit. And, that puts some pressure on the markets. And what's interesting about next week's setup is, Brexit, the actual vote, happens the week after. So to think that the Fed would raise the rate ahead of an event like that would be fairly surprising. But they could have a hawkish tone and indicate that maybe we're going to see a rate raise in July. But we'll see what happens next week. So we basically on this NASDAQ, we pulled right back to this trend line and managed to hold it. We actually pierced it a little bit and then managed to hold it into the close. Next week, what we want to see, I think the two important areas that we want to pay attention to is 4,800, which is a Fibonacci retracement of 23.6%, and then also 38.2%, where you've got some pretty nice price support where it acted as resistance in this 46.90 area. Okay, so if we break below this trend line, I think we could potentially come down and test 4,800. If we lose 4,800, the next step is 46.91. So let's take a look at the IBB, which disappointed me again this week. And that was kind of my concern last week, was that we were coming up into this 289 area, right? Which we had this trend line that we were going to be dealing with and this price resistance that we were going to be dealing with. And what we had wanted to see was we wanted to see this hold over 270, right? 270 acted as resistance here, acted as support here, then failed here. Once we got back over, I was hoping that we would be able to, this would be able to act as support once again over here, and it failed. Now we're looking at this 265 area. If we break below 265, we can come all the way back down and test this 248, 250 area, let's call it. And let's back this out to the weekly. The big concern here is that if we break through this long-term trend line, then we could see some real serious pain in the IBB, and that is concerning. So we've got a ways to go before we come down and test this area, but we really need to see this 265 hold as support next week. If it breaks down, I think we're going to see more pain within the markets. Let's take a look at the IWM. So IWM was looking as though maybe we were going to go up and test 120. We got up into this price resistance right around 118.50, and it failed, right? we were unable to break through this price resistance. Now I'm looking at a potential retracement to 112.91, basically 113. If 113 does not hold as support, the next level of support potentially in this 109 area, somewhere in there. But not good action on the IWM or the IBB on Thursday and Friday. Let's take a look at the SMH, which was another one that had a really nice run, right? So last week we talked about the fact that 58 basically was looking like it could be some significant resistance. And we didn't quite get there. We got real close, but now we've started to pull back. Now, where can we pull back to? Well, we can pull back to this trend line here and see if that holds as support. If it doesn't hold as support, then we are potentially looking at maybe pulling back to 52.80 or so. But let's just do this for fun. Let's take a look at the Fibonacci, potential Fibonacci retracement, which is, so 55, right? So what did we say? Basically pulling back, testing this trend line, which coincides with the 23.6 retracement on the fib. And look at that, 52.80 is a 38.2 retracement on the SMH. So SMH also is looking as though it's under pressure, and we do have some clear areas to watch for potential support. S&P 500. Let's take a look at the S&P 500, and just for fun, we'll go ahead and put the fib on there just to see how they line up with potential areas of support and resistance. So we've got a Fibonacci retracement basically around 2050, right? Of 23%. And I would say before we start worrying about that, another area of potential support would be in this 2075 area, right? 2076. I mean, look at how many times that area, that price acted as support here, and then we have it acting as resistance here. So 2075, if we lose that, then I think we go down and we test this 2049, 2050. We break below 2050, and we're basically looking at a test of 2000 on the S&P 500. Last week I brought up the fact that the T2107 and T2108 were getting back up into the nosebleed territory. Remember, 70 and above is, time that you want to start looking to capture some of your profits, build some cash, maybe even start looking for potential short opportunities when you get above 70. And, we got back above 70 this week for the T2108, and we tagged 70 on the T2107, which is the amount of stocks over the 200-day moving average. So those indicators were kind of signaling that it was time to take some money off the table, raise some cash. So last week on Friday, I had done my blog post. I had written up a really fantastic blog post about being careful. What we've had lately last week was a lot of garbage stocks that were running. I love that time period. I love it when we get, total garbage, low floaters that make these incredibly insane moves. But you have to recognize those things for what they are. They're garbage stocks that are getting manipulated, right? Gevo, for example, came out and had a press release. I think, that two jets flew on their fuel, their biofuel, and it was, the thing went off to the races, up to a $1.40 basically, And then what did they do? They came out and they did an offering. So this is why it's important to me to always look at the fundamentals. I mean, even if it's just a brief glimpse, check the fundamentals, look at the cash flow, look at the cash burn, see what they've got on their balance sheet for cash, and recognize that these companies that are low floaters and need a lot of money, need money. Every single time these guys do some kind of a press release that pops their stock, they're likely going to dilute the shares. So I talked about that on Friday. Talked about the strength of the dollar on Friday in the blog, and that was before I wiped out my whole article that I wrote up. But so the dollar had a nice little bounce on Thursday and Friday, partially because of this Brexit deal. If the Fed raises the rate, the dollar's strength is going to continue, right? If the Fed is hawkish in their statement, dollar strength could continue, unless the street doesn't believe them, right? If the street doesn't believe that they're going to raise the rate in June or July, then the dollar could weaken. But the strong dollar, we had an interesting little thing happen on Friday, and I just want to point this out really quick. Gold also moved higher, even though we had a strong dollar, which I thought was pretty interesting, right? But what didn't really move up was GDX, GDXJ, Nugget. Where's Nugget at? Let's take a look at JNUG, right? Even though gold moved up, JNUG, Nugget, they pulled back. Now, I still think that gold and silver could be decent plays, especially if we get a market that rolls over because of the perceived safety trade. Look at silver. Silver had a nice little move on Friday. So, I think gold and silver, the miners, are going to continue to be areas where there's going to be a lot of volatility, a lot of movement, a lot of travel within a day. So there could be some good short-term trading opportunities there. But you also have to keep an eye on the dollar. What was surprising was the move in oil that we had on Friday. Pulled back a little bit. A lot of the oil exploration companies, we saw a bit of a pullback. Let's take a look at ERY, which is the bearish ETF, right? If oil continues to weaken after the run that it has had, ERY could be one that you would look to play. Another one is DRIP, which had a decent little move on Friday. Could be looking at a 7 test and roll next week. If the oil weakness continues, DWTI is also another one that you can keep an eye on. But energy sector looks as though it is due for a bit of a pullback here. And it's at a pretty critical little area. This ERX, right? This is the 3-time bull. Looks like it's potentially going to test this trend line, see if this trend line holds as support. If not, where can it go? Well, I think you can come down to this 2586 area before you find some fairly significant support. So I think you need to be a bit careful in the oil and gas exploration space. Let's take a look at, I'll save the best for last. So let's take a look at retail. Retail broke down again last week, okay? And this retail has been flirting, actually, the retail is still below its long-term dominant trend. It did make a low or a higher low We'll see if it comes back here and tests this trend line and breaks below it, but retail is not looking real strong. Let's go back to transportation. Actually, transportation had a little bit of a pop, pulled back Thursday and Friday. Could come back, test this trend line here. Let's see where we could find some potential support. Actually, we're basically kind of sitting right on that potential support, right? 44.97, 45. Basically, if it breaks below 45, let's just take a look at where the Fibonacci retracements are, just for fun. So let's see, basically 44.60 or so is a 23.6% retracement. And then look at this. Look how well these line up, right? Resistance, support. So next area be 42.93. There's that oil and gas exploration, XOP. You know, definitely looking kind of weak right here. Potentially come down and test this 33.40 area somewhere in there. XME, metals and mining, you know, did have a little bit of a pullback on Friday, Thursday, and Friday. You know, copper has been getting pounded. Some of the steel names that had a nice run are pulling back a little bit. Consumer discretionary came up into this resistance, this little trend line here, pulling back. We could come back and test somewhere in this 76.60 area. Healthcare also could not break through this price resistance, pulling back. Looks as though we're going to maybe test this trend line somewhere around $71. Utilities continued to grind higher, but I would be very scared of buying utilities up here. XLK, that's the tech. Let's take a look at industrials. Look at this, basically up into resistance, potential double top, right? I mean, there is a potential for a double top there. There's also potential for a maybe a little cup and handle. So we'll see. We'll see how this all plays out. Financials took a pretty big hit off that Brexit news. Energy, look, I mean, look at this XLE. Really in an interesting spot on the XLE, right? Need to hold this trend line. If we break below this trend line, I think you could see some, you know, you could catch some people off guard, and we could see some real weakness in the energy space. XLB home builders. I want to look at that one real quick. You know, looking fairly weak on Friday. We'll see if we get any kind of continuation of that weakness next week. But so last week, you know, not only did last week or the week before did I raise cash, but at the beginning of this week, I took a position, a larger position in TVIX, and it's in my short-term swing account. And let's just take a look at the VIX real quick. Volatility. We had a pretty good little spike on Friday. You know, actually this week we had a nice little spike, basically from, you know, 13 up into the 17 range. So nice little move on Friday. You know, could we see a pullback since we're coming into price resistance here? I wouldn't be surprised if we saw a pullback or maybe even consolidated over Monday and Tuesday heading into the Fed meeting. That's, you know, consolidate a little bit, build up a little energy. If the Fed says something we don't like, then we could see a spike through on the VIX. But so the TVIX trade, I still have it. And if volatility continues to pick up, then we could see a nice little spike. I'm looking for, to start scaling out of TIVX somewhere around $3. And then I'll keep some shares for Lotto to let them run, but somewhere around $3 or so. And if fear really takes hold in the market, I think we can easily go up to 350 or maybe even a potential 4 test. So I really think you want to pay close attention to volatility. It's not just TVIX. You could also play UVXY. Those should be interesting areas to watch next week if the weakness in the markets really does turn into some fear. I mean, look, we've had a lot of negative commentary from some really smart guys, right? Carl Icahn, George Soros. I mean, we've got some people that are really have some negative things to say at some point, and this is what I wrote in my great post on a Friday that I wiped out. But the one thing I did say was that at some point the fear becomes all the fear chatter does become a self-fulfilling prophecy. When that happens, I don't know. Nobody knows, right? Part of the problem is that when everybody knows that everybody is short biased, it makes it easier on the bulls to try and scare the shorts, right? And everybody has been on one side of the boat for quite a while, and that's what's created this huge run that we've had, right? But when does that come to an end? There's nothing fundamentally out there that suggests that the economy is really great or that companies are doing really fantastic. So at some point the fear stuff does take hold. If the Brexit does happen, I think that would definitely throw a monkey wrench into the markets. There's just an awful lot of risk out there right now, and that's why I'm sticking with the caution flag. SPX, let me just take a look. SPXS, 3 times bear. If the S&P 500 does roll over, if we break below that 210 or 209 area, let's go back to the S&P 500. If we break, below 209, 2090, right, and go down to this 2076, SPXS could be someplace that you would look to play for a short-term play, right? Started to bounce a little bit on Friday. The other thing too is to remember this: cash is a position. You don't have to be fully invested at all times, and you don't have to trade every day, right? I mean, if you have one really sweet trade in a week, that can make your whole week. You don't have to be trading every single day trying to force trades. So that's it, really. I don't think there's anything else that I really need to go over. Like I said, I have moved the yellow flag to an orange for caution. Still very cautious. If I take any trades, they're going to be very short in duration, heading into the Fed meeting, and then prior to the Fed announcement, I'll probably be sitting in cash. Okay, so anyway, that's my take on the markets. Let's see what next week brings. I will be doing Stocks to Watch live tomorrow, 8 a.m. Vegas time.